happening? What's happening? What's happening? I'm a little bit late. I'm running just a little bit late. I'm sorry, I'm a little bit late. Y'all go ahead and pull up, even though I'm a little bit late. I'm running a little late. We just got finished over there with the discipline over dollars for the kids. Let me post. Let me tag pin this comment. Go to YouTube. Go to YouTube. YouTube.com/slash the new TLR. Go to YouTube. Go to YouTube. Go to YouTube. YouTube.com/slash the new TLR. What's up, everybody pulling up? Everybody go to YouTube. Y'all dropping in the chat who pulling up in here. I just got in the house. Y'all bear with me while I get everything together. Share screens. Y'all bear with me while I get everything together. Who up in here? Tap Skim, Michelle. What's going on? What's going on? Appreciate y'all for pulling up, man. I just walked in the door. Let's get the pleasantries out the way while I get ready. For anybody pulling up on the replay or anybody on the live for the first time, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every day at 9 o'clock a.m. Eastern Standard Time, usually 5:30 p.m. Eastern Standard Time. But since we was doing discipline over dollars for the youth today at the youth center, we doing it at 7:30 p.m. tonight. But it's typically 6:30 p.m. Eastern Standard Time to go over the price section, talk about how the day went. In the morning, we look at the overnight price section, talk about what we want to see in the market, if we're going to take any day trades, if we're going to try to get into any swing trades, if we're going to try to take any futures trades. We look at the different levels we want to see, look at what the market presenting us for that day. And we do it as a family, we do it as a community. The only thing I ask you to do for this free information is press the like button. It's probably over here somewhere if you're on a computer, or over there if you're on a computer, or somewhere in the middle, because they be updating stuff. But hit the like button and then hit the share button and share it with a cousin so that we can get as many cousins as possible this free information, right? If you want to support me money wise, you really don't have to. But if you go to the newtlr.com, just buy some merch. Hashtag Spider Gang. Go buy some merch. You know what I'm saying? Or hit the super chat. Buy a super chat if you feel like oh Lord. Oh Lord, who is I see trading with a dummy in here tonight. The live has been canceled. The live has officially been canceled. Trading with a dummy up in here. What's up, Mark? What's up? Here to learn and share. Here to learn and share. I appreciate you for always pulling up and supporting your boy. What's up, Brittany? What's up, Red? What's up, Chris? What's up, Trevor? What's up, Lalita? What's up, Carl? What's up, Tap Skim? What you say, Mark? If you want to donate to Tim's Tidbit, donate to Trading with a Dummy. Hey, man, let's get into it, man. Who looked at the market today? I had a busy day today, man. I did not get a chance to look at the market today. Let's pull up Ninja Trader. While I'm waiting on Ninja Trader to come up, I'll go ahead and pull up Spyleen. I pull up Spyleen while I'm waiting on Ninja Trader to open up. Spyleen, where you at, baby? Here I go. Okay, look at Spyleen, man. Look at Spyleen. Remember what I said yesterday? Remember what I said yesterday when I said bad news is not tanking the market? Remember what I said yesterday? Who remember what I said yesterday when I said bad news is not tanking the market? Somebody put a 1 in the chat if you remember me saying bad news is not tanking the market. Oh, charts. Appreciate y'all for that. Who remember that? If anybody remember me saying that yesterday when I said we at a point where bad news is not tanking the market. If you're still pulling up on IG, go to YouTube. YouTube.com/the new TLR. What's up, Stacks? I ain't say what's up to Stacks. I remember, I remember 101. Yeah, appreciate y'all for putting the ones in the chat. For everybody that remember me saying that. And bad news is not tanking the market. Let's take a walk back through time, right? We're going to go back to June 9th. If anybody remember what June 9th was the day that the initial unemployment numbers came out last week. Let's verify that. I don't want to be lying to y'all on Al Gore's internet. Thursday, there you go, boom. Thursday, June 9th. That's when cause the what's name come out on June 9th, right? The what's names come out on June 9th. Boom, right? So then, bim, June 9th, bad numbers came out hotter than expected. Remember, hotter than expected, right? We gapped down, sold off, right? Gap down, sold off. Bad news tanked the market, right? CPI numbers came out on the 10th, if I ain't mistaken. CPI numbers came out on the 10th. CPI came out hotter than expected. Gap down, mammy. Then sold off. Bad news tanked the market. PPI came out the next trading day, right? PPI came out hotter than expected. Gap down, mammy and her sister sold off, right? Did last month. Bad job numbers, bad CPI, bad PPI. Market gap down, sold off. Gap down, sold off. Gap down, sold off. Yesterday, job numbers came out hotter than expected. CPI came out way hotter than expected. Gap down, mammy, recovered. Today, PPI numbers came out way hotter than expected. Gap down, mammy, sold off a little bit, recovered like a big dog. The bad news is not tanking the market. You feel me? Whenever we get in a space where bad news can't tank the market, when we get some good news, let's get the coil. What's the coil sound? What's the coil sound? When it's coiling up like this right here, look here, from this date, look at this right here. While y'all get the coil sound ready for me, I'm gonna put a box around this right here. From the 21st up until today, right? We've been trading in the same range right here. Look at that. We've been in that same range from the 21st until today. You know, it look a little busy on the daily charts. When you go to the weekly charts, it don't look as busy. See what I'm saying? On the weekly charts, it don't look as busy because it's a higher time frame. But we've been in the same little range, right? We've been in the same little range for 1, 2, 3, working on 4 weeks now, right? Working on 4 weeks now. We've been in the same little range. It just look a little bit more busy on the weekly, on the daily chart. But if we look at how we've been coiling up, right? Coiling up. That's what it's looking for, man. What'd you say, Michelle? 2 days of lower highs and lower lows. Yep. We had 2 days of lower highs and lower lows, but I'm telling you, the bears are running out of steam. I ain't saying they running out of steam forever. I ain't saying they can't keep going down. But what I'm saying is the bad news is not tanking the market. The buyers keep stepping in, right? Y'all know my algo conspiracies, right? The algos want to go up. I'm an algo conspiracy. I think algos do everything. I don't think nobody actually buying or selling them. I think algos do everything. I think they just program the algos to say, when you hear this, do this. When you get to that price, do this. Whatever, do this. I'm an algo conspiracies, right? But the bad news is not tanking the market, right? Yesterday, let's go back and check it. Let me go back and check it because I don't want to just be talking all out of turn, right? Let me check it on what's that? It might be easier for me to check on Ninja Trader. Might be easier for me to check on Ninja Trader. Let's go back and look at it. All right, let's go back and look at it. I know this ain't what y'all pulled up for. I know y'all pulled up just to talk about the price action, but I've been ripping and running all day. I done been to the Atlanta airport. I done went and did a little class for the youth. I done did some everything. I did most stuff than a Marine. What we said, June. I got to load more days. Give me 45. Vertical line, give me a vertical line. Give me a vertical line. And I'm gonna put it at 8:30 in the morning. Vertical line 8:30. What time job numbers be coming out? What time did the job numbers come out? Can we look back? Do they come out the same time every month? 8:30. Do they come out 8:30 every week? Yeah, 8:30. So job numbers 8:30, right? Dumped, right? So we was here. So let me see. What did we close? We closed that the day before. We closed here the day before, right? It was green. The job numbers came out. It dumped, right? When the bad news came out, it dumped, made us gap down. By the time it dumped, so it made us gap down, and then we sold off throughout the day, right? Boom. That was but make sure I'm on the right day. Yes, that's the right day, the 9th, right? Boom. So that's the right day. So we closed and we was on our way up. The bad news came out. We dumped. We dumped because of the bad news and we sold off, right? Let's go to when the that was the jobless claims. Go to when the CPI numbers came out. 8:30. CPI numbers came out, right? So we closed. We closed right here, right? Right here. We closed right here. The day before, we closed right there, right? And then we was flat all night. And then 8:30, when the CPI numbers came out, dumped because of the CPI. The bad news tanked it. See what I'm saying? Bad news tanked it, right? Let's go to the next day. 13, right? CPI dumped it. PPI, the market was kind of flat. Bad PPI came out. It ain't really do too much. And then it dumped. Then it dumped and sold off, right? So the market dumped. Now, mind you, it closed over here. So it was selling off all night long. It was selling off all night long. Then when the bad news came out, it continued to die. But it kept dying because the CPI numbers was so bad. And so it just kept dying off. And then it kept dying off after the bad PPI numbers. Kept dying off. So it was already in a downtrend. But the bad news, my point is the bad news was tanking the market back then. Right? But come to this month, right? Yesterday, when the bad CPI, when the bad job and CPI numbers came out, got a double whammy of bad, right? Yak up, wicked everybody out to both sides. Ran stops to the top, ran stops to the bottom, and then clawed his way back all day long, right? And then sold off at the end of the day. So the bad news made a lot of volatility, but then we just bought back up slowly all day long with very little however you say the word, very little resistance. We had one down hourly candle up until the end of the day, and right at the end of the day, profit taking took off. Right, every candle was green after this big news candle. Every hourly candle was green except one. Very little resistance of buying back up. Right. Then today, right here, Right there. That's the news candle. Yep, right here. This is the news candle right here. This little green one right there. What they call them, spinning tops. Wick, 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 wick top, wick top, wick top, wick bottom. Right? Sold off a little bit and then climb back up for the rest of the day. One red 60-minute candle. Even less resistance today. Look at these 60-minute candles. This one red 60-minute candle, even less resistance today. Right? All the way back up. All the way back up here. Nope, that's overnight. All the way back up to here. Overnight, we still pushing up. We done took out this buy-side liquidity right here. Right? Start pushing back up. So, again, I said all of that to say that the bad news is not tanking the market right now. The bad news is not tanking the market right now. Algo's driving the bus. Yep. Yep. There you go. Ping-ow. Ping-ow. That's the sound. So the algos, I'm an algo conspiracist, but right now, the narrative is the market is right now, it has digested the inflation data. Everybody understand inflation is high. It has digested that, right? How do you know it's digested that? Because the bad news is not tanking the market anymore. Last month, when we got the bad news about the high CPI, the market tanked. When we got the bad news about the high PPI, the market tanked. But this month, we got even higher CPI. The market clawed its way back after the whipsaw. We got higher PPI. The market clawed its way back after even a smaller whipsaw. It was smaller than, you know what I'm saying? Look at this news candle right here compared to this news candle right here. Look at the difference in them news candles, right? Because the market then digested the inflation information, right? Then the bears, if you will, clawed back all day long for the whole day. It clawed back for the whole day. So it just the bulls. I said the bears. If I said the bears, I apologize. The bulls clawed back all day long. So the bears seem to be running out of steam. The bears really seem to be running out of steam right now because we getting terrible news in the market. Look at this drop right here. Look at this drop right here compared to, so over the bad news from last month, right? We closed there, and these are 3 days of bad news. So over the bad news from last month, we dropped 8.7%, right? We dropped almost 9% because of the bad news from the same thing. Bad job numbers, bad CPI, bad PPI, right? We dropped almost 8%, right? Compared to this month. Bad job numbers, bad CPI. We closed here, right? And we closed here today. Less than 1%. We closed down less than 1%. Off the same, off of worse information, but the same matrix. It's the same matrix, and the information was worse than last month. Last month, we closed down almost 9%. This month, after the same bad information, we closed down less than 1%. The bad news ain't tanking the market. Just want to share that with you. That's just little Timmy Rogers' thoughts. The bears running out of steam. The bears running out of steam. Looking at what we potentially setting up for on the daily. I'm just watching this. You ain't got to mind me, but I'm just watching. I'm keeping my eyes on this right here. I'm keeping my eyes on this right here. Right? I'm keeping my eyes on this right here. Keeping my eyes on this right here. Check us out right here. We right here. Coming here. Right there. Boom. There you go. Boom. Here. Went higher there. Boom. Broke through right there. Boom. Let me start. I need to start here. Boom. So we came here. We went there. Didn't break through. Came here. Got below it. Right? I don't care how far we go down. If we stop and go back here, it don't matter to me if we go down more, if we stop here. If we stop here and go back up. Once we get back up here, all eyes for me gonna be right here on the retrace. All eyes for me gonna be right here on the retrace. Boop, coming back down. That's where my eyes gonna be on the retrace, right there. I'm just watching that. I'm just watching that as it sets up. As it sets up, I'm just watching that. Now, let's look at the price action from the day. I want to go through all that, just say it feel like the bell's running out of steam with me. Let's look at the price. Oh, yeah. Nobody took me up on my offer to try to guess. What you say, Red? I mean, Rose, pre-OPEX and OPEX week, back test, and C puts pay very well. Take a look at Wednesday, Thursday of these weeks, see what happened. News or no news. Okay then, Rose out there dropping gems. Out there dropping gems. OPEX next week. Is it OPEX next week? What's the date? Yep. Is it the 25th? No, the 15th? It's this week. 1, 2, 3, the third Friday. Yeah, it's this week. OPEX should be today. I mean tomorrow. Should be tomorrow. The monthly expiration is the 15th, I think. Yeah, should be tomorrow. Yeah, so oh yeah, let's look at the price. Oh yeah, nobody took me up on my offer to try to get the free t-shirt, man. Why ain't nobody take me up on my offer? Why ain't nobody yeah, third Friday. Appreciate it. Tomorrow, appreciate it, yeah. Why ain't nobody take me up on my offer, man? Nobody ain't try to figure out, ain't want to tell me why I figured that was an A+ setup. Right? Why ain't nobody want to take me up on my offer, man? If you're scared by a dog, let me go back and y'all want me to map out why I took that sim thing? Let's see what we did for the day. Let me put it on 15 minutes and talk about the price action real quick. Y'all put a one in the chat. Let me see. Okay, notes, gems. Keep your strikes close within $20 range and you'll get a nice bag. I thought, no, I ain't supposed to answer. I told y'all I was going, okay, we're gonna try it again. I told y'all on the live. Was you on the live? Was you on the live? Okay, before I go into it, right? I put a one in the chat if you was on the live this afternoon. Put a one in the chat if you was on the live this afternoon before I go into what I was talking about. Right? If you was on the live this afternoon, was you on the live this afternoon? One person, that's it. That's the only person that was on the live. Only one person was on the live. If only one person was on the live, I ain't gonna waste my time going through the whole thing again. Don't nobody win the t-shirt. Don't nobody win a t-shirt. Ain't nobody want to pull up and tell me why it was an A+ trade. What I said was I was gonna share the picture, right? I was gonna share the picture, and I wanted you to tell me why it was an A+ trade. I wrote everything on there. Right? And I wanted you to tell me what made this an A+ setup for me. Right? Get out my way, notifications. That's the question. The question was, what made the contest over? Now, you were supposed to DM me what made this an A+ setup for me. I put all the notes on here. And I told you one of the criteria, I had already shared one of the criteria with you before I got off the live this morning at the overnight price action. Right? I had shared with you why I got off the live. And on the live, I told you all the I told you the narrative and I told you the bias, right? I told you the narrative and I told you the bias. And I was like, I said, okay, I want you to explain to me give me all the criteria for what made this a A+ setup for me, right? Nobody took me up on the answer. But I just break it down right now. Since ain't nobody take me up on, on the challenge. Ain't nobody take me up on the challenge, so ain't nobody win the free t-shirt. And then I also said I give a bonus free t-shirt if anybody can go into the candles, and I let you know the time frame that I left the house. I said I left the house around 11:15. So the setup happened before I left the house. And you was on the live with me at 9 o'clock, right? You was on the live with me at 9 o'clock. And then after I took the sim trade after I got off live, and I left the house at 11:15. So the setup happened sometime between there. I was like, if anybody can go in and post a screenshot of what they think the setup was based off of everything that I had just said about the narrative and the bias, if they can tell me what trade I took, then I would give them a free t-shirt, because you a beast if you can guess that. And then when I get to the airport, I'm going to share the picture. I'm going to share the screenshot that I took after I got out the trade, because I ain't think about this until after I got out the sim trade. And so I marked everything out, and I said, now what about this trade made it an A+ setup for me, for my trading style? And I gave you one of the criteria before I got off the live. No, it's not for a loan. When you marked it out, I thought it was your breakdown. No, that's just my journal. That's my journaling that I was doing. I did speed journaling, so I wrote it out with my pen. I used my little pen right here to write it out instead of trying to type it out and move all the letters around. I used the pen and wrote it out on my tablet so that I can, you know what I'm saying, just get it knocked out quick, because I had to leave. I had to go to the airport. Right? Somebody said break a fair value gap discount OTE perfect. Look at Edwin. Edwin all over it. You missing one piece though, Edwin. Edwin already gave y'all. It ain't really OTE, but break a fair value discount. Scratch that OTE off is one more piece of the puzzle that I look at for it to be an A+ setup for me. Right? The free t-shirt stuff gone already, but let's see if y'all can figure it out based off how I trade. I gave you one of the it wasn't a breaker, it was mitigation. It was a mitigation block. There you go. It wasn't a breaker, it was a mitigation block. But so mitigation block, fair value gap, discount. That's three. But what's the first piece of the puzzle that I was looking for first? Before we got off the live, I said, if something happened, I'm looking for a reason to do this. What was that something I was saying? If you was on the morning live and all these things combined make it an A+ setup for me. Let me go back to the chart while y'all looking at the picture. I'm gonna leave the picture there. I'm gonna leave the picture over here. Boop. And I'm gonna go to the chart over here. Put it in the chat. If we do this, I'm gonna put on 5 minutes, get to the same time frame. Here we go. Right there. Boom. Boom. Close below liquidity. There you go, right there. That's what made it an A+ setup for me. Right? All of those factors combined. Let's mark it out right now together. Right? We had the liquidity right here. The spot I was looking for it to take. Right? 38.75, 85. Right? That was the buy side liquidity right there. I was looking at the 15-minute time frame. I said, if we get a 15-minute closure below this right here, I'm looking for a reason to go short. Bow. We got the 15-minute closure below that, because I told you, anytime I watch the closure of the candles, if it closed below the area, that's the market telling me I want to go that direction right now. How far down? I don't know. How far up? I don't know. But I take that as the market saying I want to go this way right now. If we go down and wick back, I say, okay, that's the market saying I want to go that way, but not right now, right? So we went down here and we closed below the liquidity. And I said, if we go down here and we close below this liquidity without filling these fair value gaps, it was like a 4-hour and a 60-minute. I'm gonna be looking for a reason to go short. Boom. Criteria number 1 met. Once we met that criteria, I dropped down to the 5-minute and started looking at what we was doing. Right? Once I saw what we was doing, right, I was looking at what we had going on. Here we go right here. Once we got here, once we retraced back, no, not there, right here. Once we came here and we came down there. Once we came down here and started coming back up, I looked at what we had going on. So then I went and started looking at it, right? I started looking at it. I came from here, right? We had buy-side liquidity up there. Let me put a line up there. I'm just going to stick a line up there right now. We had buy-side liquidity above that, right? We came here, boom, came down, right? We made a low, right? Starting here, we made a low, boom, right? Then we went up, made a high, but we did not take this liquidity right here. I'll make that candle red and dot it. Right? We failed to take that liquidity right there. Right? Dash. I'll make it a dash. Right? We failed to take that liquidity right there. Right? Then we came down here. We ran the liquidity right here. Right? We took that liquidity out. We'll make that green. We took that liquidity out. Right? Where's my green? Key line pie. Boom. We took that liquidity out. Right? So, for the mitigation block, made a low, made a high that fails to run the liquidity, made a lower low, right? Made a lower low, ran liquidity there, ran liquidity there. We ran liquidity in 2 spots with this one. It was real greedy, right? Liquidity, liquidity, right? Up under the buy side where I wanted the closure to be. This was real greedy, right? This was our 15-minute closure down here. That's a 5-minute closure. That was our 15-minute, 5, 10, 15. That's our 15-minute closure down there. So that's the confirmation on the 15-minute below the liquidity line. That's the low, the high that failed to run the liquidity with a lower low, right? And then if you look right here, there is a 5-minute fair value gap right there. 5-minute fair value gap right there, right? And then if you get the Fibonacci's, and you look at the price leg, you get the Fibonacci's and look at this price leg right here. This fair value gap right there is in the discount, right? Premium discount, premium discount on that price leg right there. Even if you go all the way up to the top, even if you go all the way up to the top of the thing, premium discount, premium discount. The top of the whole thing is like a double discount. So for the whole price leg, you're in the discount. The fair value gap is in the discount. For the short part of the price leg, if I get it on the right thing, for the short part of the price leg, the fair value gap is in the discount. So I got a discount right? I got a disc. I got a mitigation block. This the mitigation block too. I forgot to tell you that. Right there, boom. This the mitigation block right here. Boom, right there. Use the body of the candle. You can use the whole candle if you want to, but I'm just using the body of the candle. I learned from PDub on breakers and stuff like that. He used the body of the candle and lets the candle teeny, 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 and then he'll use the whole candle. But just using the body of the candle, right? That's the mitigation block in the same spot as the fair value gap, in the same spot as the discount. Boom. A plus trade. A plus trade. Close below the liquidity, confirming the direction it want to go. Mitigation block set up. 2, fair value gap in the exact same spot as the mitigation block. Mitigation block and the fair value gap is in the discount of the price leg. A plus setup. Boom. I'm going to fire every time on an A plus setup. Right? And I apply that to any setup that I do. Any setup I trade. And this a little sneaky little part that I just figured out when I was talking to Lex the other day. When all of these breakers and mitigation block and stuff like that clicked in my mind. Y'all know how it clicked in my mind? Because I'm talking to Lex. Talking to Lex. She keep telling me, nah, that ain't a breaker. Nah, that ain't a breaker. Nah, why it ain't a breaker? I'm showing you what it is. That ain't a breaker. I'm showing you the same thing. I'm sending you the same thing you sending me. No, you're not. You're sending me something different. That ain't a breaker. Right? So then, when I figured it out, what I figured out, and this just little Tim Rogers' mind, a breaker, a mitigation block, it ain't nothing but a breaking structure retrace with extra confluence laid on top of it. What, Tim? What you mean by that? I'm glad you asked that question, little Timmy Rogers. Let me break it down for you, right? This is the mitigation block right here, right? Peep it. This is the mitigation block right here. Boom. Boom. I don't know why I did that. Because that ain't what okay, boom. There you go. I'm going to put it way over there like that. Exaggerate it. Right? This is the mitigation block right there. That block right there. Right? What makes it the mitigation block? Because we made a low, a high. Over here, look at this one here. Right? From number 1, we came down. We made a low. Right? We made a lower high because we didn't run up above that low. Right? And then we made a lower low. Right? So from this high, we made a low, a lower high, and a lower low. Right? You go to the low in the middle. This candle right here is the mitigation block. You can use the whole candle if you want to. You can use the body if you want to. I like to use the body. That's how it was taught to me from PDub. And plus, the body of the candle is where the bulk of the trading took place. Like the wicks is just price went there, but they couldn't keep it there. You know what I'm saying? All the agreed on prices within the body of the candle. The wicks was just some little tug of war stuff, right? So that's why I like to use the body. Unless it's just a little indecision candle, then I use the big candle. Or if the wicks like stupid long, you know what I'm saying? I don't like including stupid long wicks. But it's up to you if you want a wick or no wick, right? So that's what make it a mitigation block. But looking at this right here, what is this? Let me put a line over here. I'm going to put a line right here. Somebody tell me when we come past this point right here, what is that known as? When we come past that point, when the market traded up and then it came back down past this swing low right here, what do we call that right there? Somebody put it in the chat for me. No, mitigation block is not the same as an order block. I took the same trade, got 44 instead of 48. Break in market structure. Break of market structure. Exactly. So when we came right here, that's a break in market structure. What do I say every time we have a market structure break? What do we usually do? We usually trace back to that market structure break and continue selling down, or trace back to the market structure break and continue selling up. I say if you're a breaking market structure trader, you're looking to go short when it comes back to this breaking market structure, or you're looking to go long when it comes back to that breaking market structure. If it don't stop there and it keep going, they call that a fail to retest, or whatever they call it. They call it a fail to retest. But I already done soaked up some more game on the fail to retest that give you another setup. But I ain't mastered that one yet. I'll break that one down for y'all when I master that one. But it's another trade dealing with the breakers and the mitigation blocks and all of that. But I'll break that one down when I master that one there. But once I realized that these mitigation blocks and these breakers is nothing more than a breaking structure with extra confluence involved in it, click like a light. Click like a light. Shout out Lex. Shout out PDub. They kept telling me over and over, you see it, you already know it. All you got to do is just pay attention to the lows and the highs. Man, I don't know what y'all talking about. Get off my phone. Y'all making my head hurt. I'm just going to trade my fair value gaps. Leave me alone, right? But let me break it down for you now the way Lil Timmy Rogers understand it, right? Here we go. Mitigation block, right? You coming from this high or coming from a low, just flip it on the head if you talk about going the other way. So you go, you make a low. If you're going the other way, you'll be making a high, right? You come back, you make a lower high, right? If you're going the other way, you'll be making a higher low, right? You come back down, you make a lower low. If you're going the other way, you'll be making a higher high, right? You go to that low or that high in the middle at step number 2. That's your mitigation block. It don't matter what color the candle is, whatever candle is on that swing low or swing high, that's the mitigation block, right? The only difference between a mitigation block and a breaker is this step number 3 right here. If this step number 3 goes above this high and runs liquidity, if you make a low, a higher high, and then a lower low, now this is a breaker instead of a mitigation block. So if you come down here, you make a low, you make a higher high, and then you make a lower low, instead of being a breaker, now it's a mitigation block. I mean, instead of being a mitigation block, now it's a breaker. That's the only difference in the two. Step number 3 right here. This step number 3 is not going to break the low or the high. It's not going to take liquidity up here. You're going to make the low, make the lower high, make the lower low running liquidity. On the other side, it'll be a high, a higher low, and then, a high, a higher low, and then a higher high. You know what I'm saying? Just flip it on the head. Flip it on the head. Y'all get it, right? And then, now, so that's what makes it. And then the reason why I say it ain't nothing but a breaking structure with extra confluence is because only thing it's doing is going for a breaking structure once you make this lower low, and you just retesting the breaking structure. But it's got the extra confluence in there because this breaking structure just so happens to be a mitigation block or a breaker. So you got the breaking structure and you got the mitigation or the breaker, mitigation block or the breaker. That's 2 levels of confluence so far. Then you tack on the fact that you have a fair value gap right there in line with it. That's more confluence, making it a higher probability trade. Then you add in the fact that it's above 50% or below 50%, A+ setup. A+ setup all day long. That's it. I take an A+ setup all day long because I had already been taking breaking structure retraces, and I never could, it never made sense in my head. What's a breaker? What's a mitigation block? You're making me sick. But when I was talking to Lex, I say, so Lex, it ain't nothing but a breaking structure. It's a breaking structure retrace. And she was like, yeah, but with more confluence. I'm like, man, why you ain't lead with that, man? Yo, look at the lower high, the lower low, the higher high, the lower low, the lower high, the twist, the tie, the do the hokey pokey, and you turn yourself around. Come on, man. Come on, man. Just say a breaking structure with extra confluence because this right here, and it'll make sense in little Timmy Rogers' mind, man. But that's my breakdown on the the mitigation is in the fair value gap. Yes, it is. On this example right here, this mitigation block lines right up with this fair value gap right there. Extra heavy duty confluence. That's extra duty for a fair value gap trader like me previously. I would have just been trading it back to this fair value gap, right? But it would have just been a fair value gap trade. But now, looking at it, I got a mitigation block, I got a breaking structure retrace, I got a fair value gap, all within a discount in a bearish trend. So that's an A+ setup. You see what I'm saying? It's just extra confluence on top of each other to give it a higher probability, right? Is it gonna work 100% of the time? No, it's not, because they do have a such thing as a failed retest or whatever. But the failed retest just goes into another trade that I haven't mastered quite yet. But a failed retest, it'll probably come back up to this point right here. It's more than likely gonna come to this point right here before it sails back down. So that'll be your target right there. 9 times out of 10, you come down, boom, set that right there, set that high, failing to run them lows, come down, right, blow through this mitigation block, fail to retest, right, fail to retest, and then you go up, you probably gonna sell down from here, boom, because that's where the market want to sell from, right? That's just, but I ain't mastered that trade yet, so I still got to figure that one out. But for this mitigation block and these breakers, lock, cock, ready to rock. That's my explanation of it. That's the way little Timmy Rogers see it. That's the way I'm going to trade it from now on. If that ain't it, I don't care. Let me think what I think. Do we got any questions in the chat? As customary, I'm going to put the link in the chat if anybody want to pull up tomorrow, Friday. We're going to do the overnight recap, and then the overnight price action. Then later on, the link in the chat, if anybody want to pull up, anybody want to ask anything, anybody want to share anything that I missed, anything anybody saw, pull up, share it with us, ask a question. Called it a breaker because I use intermediate swings instead of the high UU. Okay then. Okay, appreciate that. Yeah. And then you can have mitigation blocks inside breakers and all that right there. They can be layered inside of each other. You know what I'm saying? They can be layered inside of each other. For example, if you got a breaker that's over, you know what I'm saying, more a span of time, it may be a mitigation block inside there. Then you could take a trade off that mitigation block, whichever one come first, and then when it come back up later on and come back up to the breaker, you can take it off the breaker again if the sentiment's still bullish or bearish. You know what I'm saying? Anybody got anything? Anybody got any questions? Anybody want to pull up? Anybody got any questions? They can pull up. If you don't want to pull up, you can type in the chat. What? Can we do a review on Saturday? No. No, we cannot. I'm gonna be chilling. I'm gonna be chilling and relaxing. Oh, this weekend, I ain't made the little thumbnail yet, but this weekend, the homie Mo from OTB Clubhouse gonna pull up on Sunday, and he gonna do he gonna talk about supply and demand trading. He gonna talk about supply and demand trading. Rhonda says she found the break on Amazon chart today, but because I was at work, didn't see it while it was happening. It's all gravy. Just chalk it up to back testing. You are late, 100. We want to talk about nothing but by bad news ain't tanking the market, and my take on mitigation blocks and breakers. I broke it down in the way that little Timmy Rogers understand it, where it ain't nothing, no more than just a breaking market structure with some extra confluence to it to make it a more high probability trade. Once I figure that out, I'm unstoppable now. Can't tell me nothing. On the 15-minute, there was another breaker trade for the afternoon. It was perfect. To the upside, it was on enough to the upside. I appreciate you, Edwin, for sharing that. Y'all go back and look at the afternoon. Edwin said it was on the 15-minute. It was a breaker on the 15-minute. It was perfect. It was going to the upside. It went up in the afternoon, so I'm assuming it went to the upside, Edwin. Yes, to the upside. See that he ain't even tell me which way it went. I just said I'm assuming it's to the upside because the market went up today. And guess what I said? It ain't nothing but a breaking market structure retrace with some extra confluence. So when you tell me, hey, if you say, oh man, I took a trade off a breaker this afternoon and hit my target. If I go in there and I see the market went up in the afternoon, oh yeah, he took it to the upside because it's a breaking structure retrace with extra confluence. That's all it is. What time frame was the example you just showed? It was on 5 minutes. I showed the picture again. I put the picture in my story. I told y'all I was giving away a free t-shirt if somebody could tell me why what made it an A+ setup for me, and ain't nobody take me up on it. This is right here. This is it right here. For anybody that came in late, like 100, mitigation block starting right here at number 1. If going the other way, you just reverse it. Starting at this swing high right here. The other way, you'll be at a swing low. You come down, you make a low. Going the other way, you'll make a high, right? You come up, you make a lower high, right? Going the other way, you'll make a higher low, right? Come down, you make a lower low. Going the other way, you'll make a higher high. This low right here, this high failed to run liquidity. It did not run liquidity. It's a lower high. Opposite way, it'll be a higher low. It won't be running liquidity, right? This low right here, it ran liquidity. It ran liquidity twice. In this case, it was real greedy. It ran liquidity here and ran liquidity there, right? Boom. Once it ran the liquidity, this right here, you go to the low. The other way, you'll go to the high in the middle. Don't make a difference what color the candle is, whatever candle on that swing low or the swing high, the other way, that's your mitigation block, right? Because we didn't break through. I like to use the body of the candle, and on anything I'm marking, I like to use the body of the candle. But you can use the wicks if you want to, but I just prefer to use the body. Then the only difference is to make it a breaker is number 3 will actually make a higher high and run liquidity. On the other side, number 3 will make a lower low, running liquidity. That's the only difference between the mitigation block and the breaker. That's the only difference. Now, the reason why I say it's just a breaking structure retrace with extra confluence, because when we came down and we made this low, we made this high, when we trade back through it, what do you call this point right here? A breaking market structure. So that's a breaking structure. When you break market structure and you come down and you turn around, when you come back to that breaking market structure, what do they call that? They call that a retest. If you are breaking market structure trader, when you break market structure to the bottom side and you come back for the retest, this is where you looking to go short. If you break it to the upside, come back for the retest, that's where you looking to go long. So it ain't nothing but a breaking market structure retest with extra confluence, because you got this mitigation block or this breaker right there. And what makes it a high A+ setup for me is if there's a fair value gap, just like it is right here. We got a fair value gap sitting right in the exact same spot as the mitigation block. And we got this mitigation block and this fair value gap is at the discount of this entire price leg, because the discount was like right here for the price leg, so it's in a discount. And if you just go on this short price leg, the discount is still in the discount, because the equilibrium was right here. So no matter which one of these price legs you use, this mitigation block and this fair value gap and this breaking structure are all in the discount. So when it trade back to it, you fire. Will it always be right? No, it won't. But excuse me, that's a breaking market structure retest with extra confluence, or you can just say it's a mitigation block. If this number 3 breaks higher and runs liquidity or breaks lower on the reverse side, that would just be a breaker instead of mitigation block. That's my recap again for everybody that came in late. Like 100, send you the shirt. What? I told people this morning what it was going to do. Send you the shirt. Oh, yo, 100 did say it was going back to 12 o'clock. He said the market gonna go back to 12 o'clock. And it did. It went back to 12 o'clock. But you ain't getting no shirt. That wasn't my contest. That wasn't my contest. So it's called a mitigation block for downtrend. No. Now, Michelle, don't get confused. Don't get confused on it. It's called a mitigation block if number 3 does not break liquidity, does not break for liquidity. If number 3, if you come and make a lower high and a lower low, then this is the mitigation block. But if number 3 goes up and make a higher high, if you go low, higher high, lower low, then number 2 is a breaker. So it don't matter the trend. If you flip it over on his head, this would be still a mitigation block, except it'll be high, higher low, higher high, right? It'll be high, higher low, higher high. If you flip it on his head, and then that'll be a mitigation block right there. But if it's high, lower low, higher high, then that'll be a breaker. You see what I'm saying? The only difference is the number 3 spot. If the number 3 spot do not run liquidity, then the number 2 spot is a mitigation. If the number 3 spot does run liquidity, then the number 2 spot is a breaker. Did I clear that up for you? Okay, Kay got it. I appreciate it. I just want to make sure I cleared it up for you. Does the mitigation block have to line up with the body of the candle next to it? No. No, the mitigation block is the candle that's in the swing low or swing high. Whatever candles in this swing low or swing high, no matter what the color is, that's the mitigation block or the breaker. It don't matter what the color of the candle is. It don't matter if the bodies line up or not. You're just looking at the pivot points. You coming from here, you going boom to the low, boom to the high, boom to the low. You're looking at the pivot points, like how number 3 is this candle right here. That's the candle that made the high. Number 4 is this candle right here. That's the candle that made the high. Number 2 is this candle right here. That's the candle that made the low. I said high, but low. Number 1 is this green candle right here. That's the candle that made the high. Whatever candle that makes the pivot point, no matter if it's a red or a green candle, that's going to be the mitigation block. And I just choose to use the bodies of the candles. Some people use the entire candle for their breaker or the mitigation block. I just choose to use the body. Like if it would have came back and just came to the candle of this right here, I would have missed the trade because I wasn't looking to get in there. I was looking to get in at the bottom of this fair value gap right here. That's where I was looking to get in, at the bottom of this fair value gap right there, which happened to line up with the mitigation block, which happened to line up in the discount of this price leg. All of that made it an A+ setup for me because I had the mitigation block, the fair value gap, and the discount after the closure below the sell side liquidity, telling me that the market still wanted to go down. So confirmation to the downside, mitigation block, fair value gap, 50% discount, all of that made it an A+ setup for me. It was an A+ setup for me. Hopefully I explained that. Okay, thanks. Yeah, I was going to say hopefully I explained that good enough. What's up, Todd? What's happening with you? Oh, you got on a face mask. I'm like, what in the world going on, Todd? You got your necklace on backwards, but you got a face mask on. Hey man, I don't see nobody trying to pull up. I don't see nobody got no more questions. I've been on here for a whole hour, so I'm about to go figure out what's for dinner and take a shower and find something to fall asleep on Netflix or Amazon Prime or one of them streaming services that I got. I appreciate y'all for pulling up, man. Hopefully I was able to clarify something for a cousin. If you like this video, click the like button. Excuse me. If you think another cousin to get something out of this, share this with another cousin. That's all I ask, man. I try to get on here and share stuff that's in my mind for the free 99. I don't ask nobody for a dime. So please just hit the like button and share it with a cousin so as many cousins can get this information as possible. I appreciate Tim Dog. What's up, Tim Dog? Where the wolf pack? I appreciate y'all, man. I'm about to get out of here. See y'all in the morning at 9 o'clock for the overnight price action. Gone.